Stocks are moving higher. We've seen them move higher this morning on news that Pfizer is reporting its vaccine has a 95% efficacy rating. Of course, it does plan to submit its own plans and approval to the FDA in the coming days. And for more on how these markets are moving this morning, I want to bring in Michael Jones, Chair and CEO at Caravel Concepts, an investment planning software company. Michael, it's good to see you this morning. So markets taking a bit, though, of a breather from a record rally that we saw earlier this week on Monday. How positive is this vaccine news for the overall market?
Oh, it's fantastic news. You know, Napoleon once said that the main thing he looks for in a general is luck. And I think we have to say that the Biden administration is getting off to a very lucky start with both the Moderna and the Pfizer vaccine showing such extraordinary efficacy rates. So I think we really can look forward to, say, by late summer, early fall of next year, something approaching normalcy in the global economy. And that's just a tremendous lift for stocks. I also think with the pharmaceutical stocks in particular, the technologies that are underneath these new vaccines are the potential for a whole new wave of medical innovation. So it's not just that there's going to be huge demand for COVID itself. There could be a whole new wave of products that come out of these technologies that could lift these stocks for some time to come.
So it does seem that banking on the reality that we would get a gridlock in Washington when Biden takes office, knowing that we still have the Georgia runoff election on January 5th, markets took that in stride when they got that news earlier. But how do you stack that up against stimulus, which is still lacking, another round of fiscal stimulus, and what that means for the markets?
Well, first, let me say that I think the markets did get the election outcome that they were hoping for, a Biden presidency, because Biden is absolutely committed to a big stimulus package with lots of Fed financing. That's good for financial markets. And correctly, I think the market's anticipating that the Republicans will pick up at least one seat in Georgia, and that's going to prevent any big tax increases. I think that the fears of gridlock may be overblown with respect to stimulus in particular. Tax increases, absolutely, there's going to be gridlock. But with respect to stimulus, remember that the Republicans will be down to 1 or 2 votes in the Senate. And it only takes a couple of people to cross over to get legislation moved. And I think in the case of stimulus, there are enough red states that are suffering big budget deficits and big potential cutbacks in municipal services. I think there'll be enough of a consensus to move legislation forward, particularly when you think about Biden and McConnell have a 30-year relationship of compromise and working together on legislation. I think we'll get something done in that specific area. There'll be a lot of gridlock in other areas.
So it's interesting to see that the Dow on the left-hand side of our viewer's screen is the only indice that's higher today. It's up fractionally about 0.3%. Of course, Boeing is a key component in the Dow. Boeing up 4.5% on news that the FAA has certified the jet to fly again, of course, with the proper pilot training that is needed and other steps that Boeing needs to take before we actually see these back in the sky. What does that do for overall market sentiment? The fact that this massive manufacturer of aircraft here in the U.S. is finally going to be able to fly its most lucrative jet again?
I do think that, and I might be out of consensus when I say this, but I actually continue to worry a bit about Boeing despite the recertification of the 737 MAX. For one thing, yes, the FAA has recertified the jet, but has the flying public recertified the jet? And is there confidence in that airframe? I think probably more importantly, the airline industry has made big cutbacks in capacity. They've got a lot of idle planes. Demand is going to come back with the vaccine. They're going to bring that capacity back online, but they don't need to order any planes for a long time. And Boeing is sitting on $70 or $80 billion of unsold plane inventory. That feels to me like a big headwind for their earnings in 2021. And I think a Biden administration is going to be less friendly towards defense spending than Trump administration. So you could see the civilian aircraft and the defense sides of Boeing see some headwinds. There's euphoria, there's good news today, but I just worry about the sustainability in light of some of these headwinds underneath the surface.
I think all very valid points there, Michael. Let's talk some Target, the company crushing its third quarter earnings that were reported before the bell this morning, beating on the top and the bottom lines, recording same-store sales growth of more than 20% versus the 11.2% that was expected. What do these trends say about the retail environment heading into the holidays?
So first, I think the biggest message that you're getting from Target is the notion that clicks and bricks, that model that Target and Walmart went for to try and counter Amazon, it's been very, very effective. And COVID has only accelerated that transition to that business model. I do think, though, that as we move towards the holidays, retail sales yesterday disappointed on the top line, and I think we're going to see some more disappointing retail sales. Two reasons for that. One, we've had retail sales actually above pre-crisis levels because of all the stimulus support to consumers. That support is fading out of the consumer's pocketbook right as the data is expecting a big surge in consumer spending. So I think we've had a disappointment on retail sales. I think we'll see a few more. There will be isolated pockets of excellence, Target, and so forth, where they're taking market share. But I think the overall retail environment, until we get into the new year, until we get a new stimulus package in place, we could see some headwinds for that part of the economy.
All right, Michael, we got to leave it there. Thank you. That's Michael Jones.